what's in the offer to purchase? Well, we've had people say, we'll say, I'm buying my uncle's house, and we'll say, well, we need the offer to purchase. What's an offer to purchase? Well, why do we need that? I'm just buying from my uncle. Well, all these stuff have to be in writing, and the buyer and the seller have to agree to purchase price. Concessions, meaning, is the seller giving the buyer anything? Is the seller paying $1,000 towards their closing costs? Conveyances basically is how they're going to take title to it. Gives you, the buyer, contingencies. You write right in the offer, and here's something that you would never do on your own, but an attorney or a realtor would help you with that, saying, hey, you got to have 14 days in order to have a home inspection done. If you want to have a home inspection done, you have the right to do that anytime in that 14 days, and then the seller has the right to come back and rectify or fix any inadequacies there that are there, whatever's wrong. The earnest money, it spells out earnest money like immediate and future, although I don't see much of that. Typically, you will write a check for $500 to $1,000 for earnest money and give it with the offered purchase. The earnest money usually goes in the realtor's trust fund, and it appears at closing as a credit on your statement, so it's part of your down payment. A home inspector will actually go through and look at things in the home, the heating system, the plumbing, up in the attic, look at the insulation, check the electrical wiring, things like that the normal person wouldn't do. The most prevalent kind of a mortgage that we do is a fixed rate mortgage. A 30-year fixed rate mortgage is typically what first-time home buyers will take out. No surprises, the rate is guaranteed for 30 years. Your payment can change, although it will change from year to year because your property taxes fluctuate up and down, so it's going to change for that reason. Adjustable rates are typically a better rate in the beginning, and it's fixed for a period of time. We just came out with a new product about 2 weeks ago that is just perfect for first-time home buyers. It's a 7-year arm. It's a 3 1/4 rate. Our fixed rate for 30 years has been around 4 for like months. This is a 3 1/4 rate, locked in for the first 7 years. It's still a 30-year long mortgage, but at the end of 7 years, that rate probably will go up. So you would only take that if you think you're only going to be in this house 5, 6, 7, 8 years, somewhere in there. We call it a budget bi-weekly process. Every 2 weeks, you take money from your paycheck and put it into this account, this separate little savings account. And then once a month, you transfer from that account onto the mortgage, and you transfer more than the standard payment. So basically, you're making more than 12 payments throughout the course of a year, and that helps.
And normally, you're only going to find that at a credit union. Banks don't do bi-weekly.
The WIDA loan is a good loan for first-time home buyers. There's purchase price limits and income caps. I just looked yesterday, I think it's like pretty darn healthy. It's like $80,000 a year you can earn and still qualify for a WIDA loan, and your purchase prices are in the 220s or something like that. So it's pretty good. The whole difference there is WIDA is a 3% down payment, conventional is a 5% down payment. FHA loans are a good alternative for first-time home buyers who have not quite the good credit scores. Did we talk about 740? They like to see a minimum score of 740 or higher. Now this is that middle score. After we threw out your high ones and discarded your low ones, your two middles, if one is 740 and one is 730, we have to use the 730. And with Fannie Mae, you would pay a premium. You would pay some discount points because your score is 730 versus 740. With FHA, you will not pay any points. FHA really doesn't care if your score is 740, 720, 690, or 670. They really don't care. You're getting the same deal. So FHA is a good alternative for somebody who has some credit issues and doesn't want to pay the points to do a conventional loan.
Or doesn't have 5% down.
Yeah, because that also is 3.5% down.